Imagine a nation perched between France, Germany, and Italy, no oil, no vast farmland, yet with a per capita GDP north of $106,000. Switzerland ranks second globally, even though its neighbours' incomes are barely half its own. How did this landlocked Alpine republic become the world's richest country per person and master the art of neutrality, secrecy, and niche industries? Let's explore the Swiss paradox. Switzerland's claim to fame begins with neutrality. Since 815 AD, it has never waged foreign war. It declined EU membership and joined the UN only in 2002. But neutrality isn't passive. It's backed by the hedgehog strategy, industrial strength fortresses carved into the Alps, booby-trapped tunnels and hidden cannons, ready to self-detonate key bridges rather than be occupied. This ruthless to self-defense deterred even Hitler's plans, while the Swiss quietly touted themselves as reliable partners worldwide. Neutrality's perfect partner was banking secrecy. From 1934's Federal Banking Act through decades of confidential vaults under mountain forts for UBS, underwater bunkers for Credit Suisse, Switzerland became the world's top offshore center. By mid-century, a quarter of global cross-border wealth rested here, half of all billionaires banked in Zurich. Even stolen Nazi gold flowed in, and neutral country status let Swiss francs trade freely when other currencies froze. But secrecy carried moral stains. In 1998, UBS admitted handling Nazi-looted assets. A 2009 US Justice Debt Settlement forced Swiss banks to share thousands of account records under penalty of fines. Tax evasion havens gave way to information exchange pacts with the US and EU. Since 2008, Finance's GDP share fell from 11.2% to under 9%. Credit Suisse's 2023 collapse led to a forced UBS takeover. Rather than crumble, Switzerland pivoted to high-value industries. 3 of its top 5 public companies, Roche, Novartis, and Nestlé, drive half of Swiss exports. Pharmaceuticals alone now account for 50% of shipments, fueling robust earnings per worker. Next come precision manufacturing, watchmaking, machine tool firms, escalator maker Schindler, and engineering titan ABB. Swiss luxury brand DNA, meticulous quality, limited supply, and premium marketing powers watches, chocolate, cheese, and knives. Key to that success is vocational training. 2/3 of Swiss teens enter 4-year apprenticeships after 9 years of school, working inside companies 3 days a week and studying the rest. By age 19, they've mastered trades in labs, workshops, or tech firms. This dual system turbocharges skill formation and anchors young talent in core industries. Politically, Switzerland's decentralized democracy keeps it nimble and inclusive. 26 cantons govern schooling, taxes, and local laws. The 7-member Federal Council rotates its annual presidency without party repeats. Citizens launch referendums with 50,000 signatures, voting on issues from EU entry to paid leave. In 2012, Swiss rejected expanding vacation from 4 to 6 weeks by 2/3. Direct democracy breeds long-term thinking and consensus. Switzerland's sturdy neutrality and strong political framework also made the Swiss franc a true safe haven currency. In crises, capital floods in, forcing the Swiss National Bank to pioneer negative and zero interest rates, and even impose an EUR-CHF floor in 2011. Twice it blindsided markets, shocking traders and slamming franc carry speculators. Despite holding nearly $1 trillion in reserves, 25% in US equities, it refuses forward guidance. Policy drops arrive unannounced. Beyond finance, secrecy lives on in the Geneva Freeport, a tax-free art vault under the Palais des Nations. Over 1.2 million artworks worth north of 100 billion sit there under anonymous shell company ownership, avoiding duties and VAT. But post-2009 laws require provenance declarations, yet rip-up old deal storage rooms still hide long-forgotten treasures. What's left for new old money when grey industries fade? Switzerland climbed into pharmaceuticals and precision tools long before. The global health boom ensured Roche and Novartis never looked back. Machine tool makers, elevator firms, and Swatch Group's watch brands, from Omega to Tissot, export Swiss-made excellence worldwide. These sectors lift national income, justify high living costs, and support Zurich and Geneva as top 10 expensive cities. Yet currency strength still bruises exporters. The franc's relentless appreciation, 98% overvalued in 2011, forced currency interventions and rock-bottom rates. Negative 0.75% in 2014 failed, leading to a franc surge of 15% overnight. Today, the franc trades above dollar and euro. SNB watchers live on policy surprises and must brace for shocks. In short, Switzerland's economic empire rests on three pillars. Neutrality backed by Alpine fortresses, avoiding war but tilting global trust. Secrecy transforming into legal transparency, banking evolved into a global wealth hub, then reinvention. High-value exports and vocational excellence, pharma, precision manufacturing, and relentless quality. These pillars, plus decentralized governance and safe haven currency status, explain why Switzerland thrives despite scarce resources and high costs. Switzerland's story isn't just old money comfort, it's adaptation. From neutral mercenaries to fortress bankers to biotech pioneers, the Swiss rewrote their destiny. They turned geography into a shield, secrecy into a brand, and skill into gold. As deglobalization and digital disruption arrive, their challenge is to keep innovating beyond neutrality and luxury. But one thing endures. Swiss precision isn't just for watches. It's at the heart of a nation that mastered its secrets.